Alrighty, welcome traders. It is Wednesday, March 13th, 2024, and markets dropped a little bit today on the session. Our portfolio dropped a little bit today on the session, mainly due to copper strangle, which is a little bit under pressure. We'll see how it performs tomorrow. Mostly not, even though copper had a pretty significant move to the upside today, it was really mostly a volatility spike that really put it under pressure. Volatility ran up to 86 on an IVR today. So pretty good volatility. I think that opens up the door if we have any kind of a pullback in copper to adding another strangle in here. So it'll be something we'll be watching as we move forward. But let's get into the markets, and then we're going to touch on some trade rules today as well. So let me get off the screen so that you can see everything that I'm talking about, and let's jump right into ES. On the day. So overall, SPX dropped roughly 10 points on the session. Not a huge move by any stretch of the imagination. It was down quite a bit more early and then rallied up to close pretty close to unchanged on the session. Normally, and if we take a look really quickly here, let's jump into the day trading platform that I use here. So it gives you a little bit of an idea of what I use to day trade a bit, and we'll take a look at today's action. So when we opened up the session today, we dropped down early on by about 10 o'clock, and then really you just meandered sideways, a little bit of a pop, around 1, 2 o'clock, and then just sold off, and then a pretty hefty drop towards the end of the day. Pretty big drop right around that 3:15 time frame. Big dump on the session. So we made some money here today on 0 DTE as we moved back and forth. I think one of the things that was key was early on in the session as we dropped down, soon as we hit really these lows around 10 o'clock, and if I'm looking at my entries, I entered exactly at 10:10 today. So right here, as we were reversing higher, and you had MACD, stochastic momentum, RSI, all rising higher. In fact, there's a new day trading screen. I want to use this one because I think this gives you a little bit more detail of what I did on 0 DTE today. So let's look at it through this lens of things. So we dropped down early on in the session to these lows here right around 10 o'clock. Started to improve around 10:03, and you can see the squeeze momentum right here about 10:06 was reversing, starting to reverse. RSI was climbing, stochastic momentum was climbing, and the MACD was climbing. So all of those climbing nicely here on the 3-minute chart. And if we're looking at the full 15-minute chart, we were still down towards the lows of the day, but we weren't really heading, it wasn't a big drop anywhere. Nothing was falling. In fact, RSI was kind of holding its own, if not trying to gain a tad right around that time. So I sold a put spread right around here for 0 DTE. Then right around 10:43, we sold a call credit spread, and that we basically top ticked the market almost exactly here. We got in right at the high of the morning on a call credit spread. And essentially that was when stochastic momentum was at its peak of the day. RSI was starting to head lower. The momentum was starting to run out here of the daily squeeze. And if we look right around here, around that same 10:43 mark or so, you could see the markets were starting to pull back a bit more. And now, instead of flat squeeze, we started to see some of that momentum coming out. So I put on a call credit spread that paid off. Well, we got out of, actually the call credit spread closed first on this dip back down here, and then on the right around 12 o'clock-ish or so. Let's actually put it back here. Right around here, around this time, we got out, and then essentially 8 minutes later, we got out of, at a 50% winner on the put credit spread. So overall, pretty good, solid sideways day until this late day selling happened, and then a bit of a rebound. So we're looking to look at the ES overall. I don't want to really get into day trading. It's up, fractionally here in the after hours. But if we're looking at our daily and weekly charts, overall, I'm going to scrunch these down a bit here so you can see what we're doing. Move back to ES. Give it a second. All right. So we can just continue to plow higher on the weekly. You remain overbought and moving higher, but squeeze is starting to run out of momentum. So we'll keep an eye on that. So this is not the first bar. This is actually the second week where we might be running out of some momentum, even though we're breaking above this ascending wedge pattern the last couple days. Now, we did hit the same levels. We did not establish what is the high for today, 52.47.5. So, intraday, yesterday, 52.46, 52.47.5. So we did hit an intraday new high today on the session, but then finished lower than that. MACD might be trying to get moving. RSI is pretty tight in here, as it's close to overbought, but not quite there, but it is above the 70 level. And then the squeeze had been a decent squeeze for a while, had fired on this particular move to the upside. But right now, we're still bullish on the daily. We're bullish on the weekly, but losing some momentum and in overbought territory. So I think we still may have a little bit more height to go on this particular thing, but I think we're getting to a point where, at some point, I think you've got to expect that we'll pull back a bit in the markets. All right, so there's where we are on ES. Now, oil today, fantastic day on oil, and some follow through after hours as well. But oil bouncing well off of the 21 EMA. It has held this 21 so nicely since back in here. Bounced off of it, bounced off of it, bounced off of it, closed or, opened at it, finished higher, bounced off of it, closed on it, broke below, but finished above it that day, finished above it. And then today we ran pretty strong here. And you are in a tight, tight squeeze. So the orange dots, which for those of you using Squeeze Pro, it might be black dots on yours. It's just too hard for me to see. So I changed them to orange. But in the orange dots here, you are really in a tight squeeze on oil overall. And nice move up today and up a little bit in the after hours trading. We're getting close to the bearish PSAR signals. So if we can get up here closer to about 80 and touch one of these dots, that should kick in a bullish PSAR reversal. MACD's trying to climb a bit. The weekly still very solid. Really like where we are on the weekly. MACD's rising, RSI pretty much rising. Squeeze has reversed its momentum, and now you're entering another squeeze phase. So you're tight on the weekly and the daily. I think this thing could really pop in here. That's what we're playing for. If we take a look at gold on the session after the big rally last week, we've just been meandering around a fraction this week. Today, a nice bounce off of this low here today with MACD running out of momentum, overbought RSI and starting to dip, but the squeeze not really relenting yet. So bullish weekly and daily, kind of a little bit overdone. And this pullback, was it enough? I don't know. MACD says maybe some more. Squeeze is still staying strong. So we'll see if gold continues to take this pullback and then rocket its way higher. So right now on ES, I would not be playing anything super bullish. And I'm afraid of any kind of a significant pullback. So I'm kind of watching what we're doing there. I'm really not doing anything. So it's okay to not really be putting on a lot of new trades. And we're pretty good on buying power. So there's not a whole lot that I absolutely have to do at all in here. And then if we look at, oil, it's bullish. So 112s, ratio spreads, I think those are all good. Gold, I think this pullback is still fairly bullish, but I think 112s don't set up well on gold, and I don't like the strangle right up in here yet with this, but if we get any more weakness on the daily, but still strong on the weekly, I think a strangle is potentially warranted here. And IVR is above 50, so it's not a bad strangle opportunity. I would like to have seen, I think it was a better opportunity 2 days ago. Today, yeah, maybe. We'll see. If we take a look at bonds, still one of my favorite things to trade, but frustrating as all get out to try to get into these positions. If we're looking at the weekly, we've been really in a downtrend, losing some momentum. Okay? But we're at the top of the channel, which we couldn't get through for 4 sessions. And then we just kind of sold off there with the daily just showing some weakness. We're right back to the 21. I like where we are on bonds. I tried to get into a strangle today. I had to tick it down from 28 ticks to 27 to 26 to 25 to 24 and still couldn't get filled. I'm not going to chase it right now. We can take a look at it here, but I'm going to wait to see how this thing sets up for tomorrow, and we'll probably go back at it tomorrow. Maybe we'll have to readjust the trade a fraction tomorrow, but I will not chase trades just to try to prove that I am right. All right, so on copper here, I mean, this is a massive candle today, so just a gigantic move on copper from 3.9 to 4.05. That's a pretty significant sized move. That put us over the 3 ATR. Okay, we're just fractionally off of things here in the after hours trading, but MACD, RSI, squeeze, all pointing higher, but this was a big outsized move. And if you're looking at the weekly, very strong up moves on everything weekly. You were in a squeeze, might be starting to fire a bit long. MACD, RSI moving higher. So copper, I think, setting up really well for potentially like a 1-1-2 trade. I would like to see a pullback, at least to maybe the 9 moving average or something here, in order to get long something else like a ratio spread or some naked puts potentially in that. NQ, pretty much the same as ES, but a little bit weaker. It's not showing the same type of momentum here that ES was showing. And we'll take a look. Clean up this this chart here. All right, we're just bouncing on this and moving its way sideways to higher, consolidating in maybe somewhat of an ascending triangle. So, again, we could set new highs pretty quickly. Let's take a quick look at 6A with the dollar being down on the session today. So dollar down again. 6A didn't really bounce significant, but it had a little bit of a bounce and it's up a little bit in after hours. Weekly, okay, setting up for potentially, at least right now, you've only got, you continually have kind of an equal high here. So no higher highs or anything. You do have a higher low, but we haven't seen a higher high. So right now, this is just a sideways moving trend on the weekly with at least some downward momentum. Squeeze was long and firing a bit, and we did get some movement, pullback, and now maybe continuation. We'll see on 6A. I think, some sideways action here. Not too far, not too bad. We're in strangles here. I think that'll be good for us. So anyway, that's where we are overall on that. So let's take a quick look at the portfolio, and then we'll take a look at some trade rules as well. So the day ended with us at minus 185 on the delta. So again, we're very, very delta neutral overall here. And then our theta down a little bit today to 1139, but really still at 0.26%. Nothing wrong there. Net lick dropped a fraction today. Most of that net lick was due to copper pulling back a fraction. We're up in after hours overall in the account, so that's all good. So really not a huge up or down day, just sideways on the session. BP usage did drop on the day. It's dropped a bit more in after hours. We'll just wait and see what happens tomorrow, maybe because we canceled some potential trades in here, but we're sitting a little bit light on BP, about 48%. We'll see how things shake out. But overall, when you consider your bill in here, taking that out, 48%, it's showing 53% in the after hours, but that's because right now we've got 6A doing its normal aftermarket, after hours thing where it just gets creamed because there's no bid ask for that. All right, so there's where we are. Portfolio's in good shape. We'll have some trades coming off pretty soon. We've got some strangles getting close. We've got 112 trades getting really close. They're in their low 90s now for profit on that, which is what we'll be looking at. So if we start to close those out, I think we'll close 1 or 2 of those this month as well. So that should give us a pretty good P&L moving forward. All right, and what I want to do is let's take a look through the trading plan and just jump into trade rules. I just want to reiterate my trade rules with everybody here because I think this is not followed by many people. And there's a lot of questions like, well, why don't you do this? Why don't you do that? The biggest answers for me is, read my trade plan and look at the trade rules, and you'll understand why I do or do not do things. Everything is written in here. I'm not doing anything that's not in my trade plan. Okay. Which number one is plan your trade and trade your plan. Never trade without a plan for exit and entry. That's my goal. That's number one. It's in bold here. Never trade without a plan for exit and entry. Well, if you're asking me, well, what do I do with this trade? What do I do with, what are you going to do with copper? It's down 180% and 200 is my stop loss. I'm like, I'm not going to do anything, okay? Because my trade plan says exit at a 2x loss. I'm not there, so I'm not going to do anything for it. Now, could I potentially have to make that move tomorrow? Yeah, maybe. Okay. Number two, never modify or break the trade rules in the middle of a trade. Okay. If I'm going to completely change my strategy, then you got to exit the trade completely and start from scratch. And I'm not going to trade, put on something with a certain set of rules and then midstream change the rules. Okay. That's what other furrows on the internet might do to make their profits look good is, well, if I do this, I can show a profit. Or if I do that, I can show a profit. If I roll it, I can show that I've got this profit. I don't really have a loss. Okay. I'm not doing that. I'm not changing my trade rules in the middle of a trade for any reason. Okay. Stay mechanical, trade without emotion. Okay. Number 3 rule. Take emotion out of the game. If I'm not trading with emotion because I'm mechanical and trading by my plan, the 2 biggest killers, okay, is going to be patience, okay, and your emotions. Okay? Patience and your emotions. If you can show patience to not enter a trade, like today, bonds were not filling and I wasn't chasing. I'm patient. If I don't get my fill, I don't get it. I'm not going to chase it everywhere. Okay. I can trade with patience and without emotion pretty easily. And I don't look back. Okay? If I stopped out today on something, which I didn't, okay, then fine. I move on. I don't really care what happens to the trade. Number 4 here, never chase the entry. There will be another trade. Perfect rule for today on my bond trade is I'm not going to chase the entry. I'm not going to put trades on in the aftermarket or after hours futures that I'm not monitoring. Okay? If I see something happening, I will make the change at that point in time, right? If I have to ask, number 5, I have to ask whether I should be in a trade or not, then get out of the trade. If I got to ask somebody or even myself, should I be in this or not? Get out of the trade, because if you're unsure, get the heck out. Should I hold overnight? If you're asking me, should you hold overnight, then get out of the trade. Okay? You got to get out of trades if you don't know why you're in it or what you should do next. Number 6, never revenge trade or try to show the market it's wrong. Accept the fact that the market is always right. It will prove you wrong time and again. Okay, don't revenge trade. You take a loss on something, you let it fly. Okay, take the loss, move on. Don't try to get it back tomorrow or quickly. All right, next number 7, never average down or add to a losing position. Only add to winning trades. Okay? Only add to winning trades. So I can size up if the trade's winning. Maybe I'll average a winning trade if I really see things strengthening here. But I'm not going to make big changes here. So never average down, only average up. And I really don't even do that. I don't even like to average at all. Okay, but I'm not going to average down because a losing position is a losing position. There's a reason it's losing. So stop trying to average down. Okay, there's better, your opportunity cost is going to outweigh the fact that you want to show that you made money. Okay. The only reason you're averaging down is because you're trying to prove the market wrong and that you were right. Okay. So I'm going to keep plowing good money after bad to prove the market right so that when it reverses at some point, I can be right again. Well, you know what? You're wrong right now. Instead of spending money averaging down on a bad setup, put something else on. Okay. All right, now next one. Nothing wrong with closing a winner. Getting back in is just another trade away. If you want to close your winner, fine. If you want to ask, should I close now, Tom? I don't know. What's your plan say? Well, my plan says I hold till this, but I want to take the profit now. Then take the profit now. There's nothing wrong with closing a winner. The only problem I have with closing a winner or closing trades early is that it's going to hurt my overall P&L goal for that month. Okay. If I was trading for a living, I think that might be a poor thing to potentially do because maybe I'm going to short myself some money. I could always get into another trade though, try to make that back, but it might take to next month. However, again, nothing wrong with closing a winner. Number 9, holding on to a position overnight is the same thing as buying the stock at the end of the day. Okay? If you aren't comfortable holding something in the after hours overnight, then close it at the end of the day. If you would not have opened that trade right now at the end of the day, okay, then don't stay in it overnight. Good rule to keep in mind. Number 10, if I have more than 2 losing trades in a day, stop trading and live to fight another day. So this is more on active day trading type of stuff. Not taking losses on trades from 6 months ago or something. But if I have like a loss or two on 0 DTE or a scalp that I'm doing, I'm scalping NQ or ES, then just get out and stop. All right. And don't keep moving. Number 11, never take a trade just because you're bored or looking for a trade. This is a big problem for traders out there is, hey, there's nothing going on. I'm at my BP or I'm at something. I'm looking for something to do. If you're looking for something to do, get away from the computer, okay, and don't trade. Unless you have a reason to be trading, stop trading for the day. Don't trade because you're bored or you got nothing to do. Okay. Track every trade by strategy. Number 12, put them into your trade tracker, monitor them, reconcile them weekly, monthly, and analyze your winners and losers on why you failed and succeeded. So track every trade and then reconcile those trades either weekly and or monthly and make sure that you're analyzing why you've won or why you have lost. Number 14, love this one. Hope is not a trading strategy. If you find yourself hoping a trade moves a certain way, exit the trade. Okay. Copper, it's up in after hours. Okay, I'm still down on the trade. I'm not hoping it goes one way or the other. If I've got to hope that it reverses on me so I don't get murdered, I'm probably oversized on it. In fact, if I took a full loss on copper here, it's not even barely a 1% loss. I think it's like a 1.2% loss on that copper strangle. It's not even sized for a 2% loss in my account. Okay, size small, and you don't really have to stress about it, and you're not hoping that something goes a different way. Number 15, let the probabilities work by keep placing trades over time. If you've got a winning strategy, strangles, if you're winning 90% of the time on your strangles, why would you put them on intermittently? If my win rate on strangles, the way I trade them and using my strategy, it's 90% is the win rate. Right now for this year, if I looked at my trades on strangles, okay, boom, here we go. 18 total trades on strangles and only 1 loser. Okay, 1 loser out of 18. Okay, which puts me at 94% win rate for the year. I've won 17 trades, 94% of them for the year. I've got 18 strangles I've closed already. I've already won 4 strangles on copper. If I lose this one, okay, then I'm 1 and then I'm 4 for 5. Okay. And I'm still going to be 17 out of 19. Okay, which puts me at 89.5%. So basically 90% again. I'm okay with it. Don't worry about it. Okay, plan your trade. Okay, but stay consistent. Keep putting the trades on over time. Well, I'm never going to trade metals again. Every time I trade copper and gold, I lose. Well, that's because you only trade it once in the blue moon. If you traded it every single month, you'd be in good shape. Okay, over time, the strategies will play out. Over time, your 1-1-2 trades or your naked puts, over time, those high probability trades will work out over time with positive expectancy. I'm sorry, I'm getting long here, but number 16, hedge only what needs to be hedged. Understand your portfolio and don't just willy-nilly be throwing hedges on. I don't care if that's short-term hedges, long-term hedges, black swan hedges, any hedges. I'm going to hedge my 1-1-2s. I'm going to hedge my strangles. Okay. I don't hedge my strangles. Okay. I don't feel that my strangles need to be hedged. Okay. So I'm not going to hedge them. Okay. I've got stop losses in place. Okay. 1-1-2 trades. Sure, I'm going to hedge that a little bit. And I used to take the opinion that I'm not going to hedge 1-1-2s. I do hedge those a bit here. Okay. But I'm only going to hedge them to the point that I need to hedge those particular trades because they come with some hedges built in. All right. Am I going to hedge naked puts? Sure, I'm going to potentially hedge naked puts, but I'm hedging my portfolio, not individual trades, and I'm only hedging what needs to be hedged. All right, keep it simple is number 17, simplify to multiply. I don't need to put in all kinds of calendar this, calendar that, different expirations, different options. I don't want to complicate my trades. I'm okay if that's what you can do. Okay, for me, it's not scalable if I'm doing really complex setups on my trade. So I want to simplify so that I can multiply and grow. And number 18, which was the more recent trading rule, is never try to time the market. Don't leg into trades to try to get a better deal on each leg. The market is always smarter. You have a 50-50 chance that something goes up or down every single day. 50-50 shot. Okay. Maybe with some technical analysis, you can try to put some odds in your favor. Okay. But don't try to leg in. Don't try to time the market. I think that is kind of a fool's errand for the most part for you. I think that you're not going to do well if I'm going to sell my naked puts today on this down move. And then tomorrow, when the market moves up, or in 3 days, I'm going to sell my put debit spread. Okay. Well, what if the market doesn't go up for 3 days? What if it goes down for 3 days? You still need to get your put debit spread on, but now it's going to cost you, instead of $8, it's going to cost you $9. Okay. Which is going to be, $45 times however many contracts or whatever that you've got. Okay. I want to make sure, okay, not $45, $450 times however many contracts you have. How much are you willing to lose on that? Okay. Don't try to time the market. You know what? Today's a down day. I think I'll put a trade on. I do love to put on trades on down days. If I'm close to having to, per my plan, I was going to put a trade on and today's down, I'll put a trade on today a day early because the market's down. I did that today in the small account. I put in a trade 1 day early because we were down earlier in the session doing a Zoom training with our folks at the Income Navigator service. And I want to get a trade on for them. Market was down. I had the buying power. Why not? We'll put the trade on. Okay. But I'm not timing different legs. I'm not going to play the timing game because it really doesn't work. You're going to hit it once in a while, but long-term, it doesn't work. All right. So if these rules were helpful for you, okay, copy them, take them, do whatever you want with them. Some people have already started using them out there. Modify them, do whatever you want. If it's helpful to you, great. Okay. Make sure it's part of your trade plan that you have rules that you're going to follow. Okay. I'm pretty good about following all 18 of these rules. Okay. And when you ask me questions, I will refer back to one of these 18 rules most of the time. All right. If you like this video, please click the like button below. Could really use your help. Let's get the word out to more people. The more likes we can get here, the more people we can help. Obviously, it helps the YouTube algorithms out there and would help me out quite a bit. So if you feel you're getting some value from me, please go ahead and like this and give me a little bit of a hand. If you're not a subscriber to the YouTube channel, click the subscribe button below and get notified when I'm posting some new videos. And if you want to join us in the Discord, great conversations going on. Always a million conversations about hedging, but also what do we do with these strangles? How do we get out of it? Should we stop? Should we go? Small accounts, medium accounts, large portfolios using PM, multi-million-dollar portfolios. We're going to help you trade them all. We're going to put a plan together that makes sense for you. So if you want to get your financial mind right, you got to get in and become part of the Discord with everybody. All right. Take care, everybody. I hope this was helpful to you, and we'll see you tomorrow. Bye-bye.